Hi everybody, this is Lara at pureelliottwave.com. I'm going to update my XRP and Ethereum wave counts with you and have a little look at classic technical analysis. I'm going to break this video into chapters, so if you don't want to watch the whole thing through, you can skip forward and see the bit that's appropriate to you. And I'm also going to show you how I'm going to get my data from Yahoo Finance into my analysis on motive waves. So here's my XRP. The last date was December 21st, and I've just set my time period from December 21st to the current date, apply, download. I've done the same for Ethereum. Let's now import file, chart, import data. Find them, they'll be in the downloads folder. Highlight both. I'm going to do both at once. You can do that. Uncheck these. Import. Done. Well, that one didn't work, did it? I was tentatively considering there might be a low in place, but that's not the case. I'm also not convinced there's a low in place here. Well, let's have a look and see. Elliott wave analysis first for XRP, then classic analysis, and then I'll do Ethereum Elliott wave analysis, and then classic analysis. So this is the chart that's open. This is where I'm going to start. So I had this main wave count, and then I had an alternate for XRP. The alternate, considering a cycle degree second wave, could be moving lower. I think that might be too bearish. But this remains valid. That doesn't need updating. That's the same. So the main wave count, bullish, remains valid. Price has moved a little bit lower since I last updated this chart. It doesn't really have quite the right look though. This pullback here looks to be too deep to be a minor degree correction. Let's just adjust these labels here. Most of what I'm doing daily to prepare my charts for publication is mucking around with labels and stuff like this. Let's get some labels in here on the weekly chart. Oh, no, this is monthly. No, let's not put it on the monthly. Let's look down. I think this high here is probably going to be this high here. Let's expand this out. This is valid, but I don't think it looks right. This looks too time consuming. If we have this here, now it's taken 19 weeks compared to intermediate 2, which is only 10 weeks, compared to primary 2, which is 5 weeks. Doesn't breach any Elliott wave rules, but the proportions aren't good, so it doesn't have quite the right look. I've had someone in comments on the YouTube channel call that a degree violation. I don't like the word of violation because it suggests a rule is violated. There's no rule about how long different wave lengths should last. So there's no rule broken. It's just doesn't have the right look. Different things. Not all of these little coins have really good looking proportions, so you've got to go back over what you can see as a complete structure and look at how it behaved there. This doesn't look right. I don't like that at all. I think this might actually be the correct wave count. Well, no, because this requires Y to move below the end of W, so it requires a new low below 0.11509 for that to have the right look. This structure here would be a double zigzag. Okay, sir, we heard you the first time. The first zigzag labelled primary W, joined by a 3 in the opposite direction. The second zigzag, the depth of X in relation to W. In terms of price distance travelled, it's only 0.496. It looks bigger because of the semi-log scale. The rule regarding a flat correction, if we were to label this a flat, A, B, C, is that B must retrace a 90% the length of A, and this is only 0.49 of what would be A, so you can't relabel this as a flat. It would violate an Elliott wave rule, which means it should be labelled a double zigzag or a double combination. It could be a double combination. If it's a double zigzag, then Y should deepen the correction, which means Y should move below the end of W. The purpose of Y in a double zigzag is to deepen the correction when the first zigzag doesn't move price deep enough. Let's have a look and see how deep W was in relation to cycle wave 1. Oh, it was a 97% correction of cycle 1. Again, it doesn't look that deep because the scale is a semi-log scale. But it is really deep. So, what if cycle 2 is a double combination and Y is just going to move price sideways? You'd expect Y to end about the same level as W. It doesn't have to move below W. Double combinations have a different purpose. They're labelled WXY. Double zigzags are labelled WXY, but they're really different structures. Double zigzags are part of the zigzag family, and they should have a strong, clear slope. But double combinations are sideways movements. They're part of the family that includes flats and triangles, which are sideways structures. They are akin or analogous to, in classic analysis terms, consolidations, whereas zigzags are akin to or analogous to pullbacks or sharp bounces. Elliott wave just gives them structure. So if cycle 2 is a double combination, then primary Y would be expected to end about 0.11509. Doesn't have to be that low, but it would be expected to move sideways and take up time. That's its purpose, so that's possible. Let's go back to this. I don't think this looks right. I think cycle 2 would look better if it's moving sideways. So let's take a look at this at the daily chart level. I'll still label this alternate, but I suspect it actually has a higher probability at this point. So if X ends there, what's Y going to be? If we want to continue, no, sorry, that's a rule violation. Should be ABC. There we go. If we want to consider Y as a flat correction, I don't think A would be done yet. So what if we're going to consider Y moving sideways? So A could be a zigzag, and then B would be a bounce, and then C would end about the same level as primary W, but it would move price sideways. So trying to show the idea here. Within intermediate A, minor B or a second wave can't move beyond the start of A. That should be done now, so this should be in the invalidation point, 1.41377. Within C, no second wave correction can move beyond its start. I'm going to get rid of that. And expect A may be a zigzag, and then B, and then C. Okay, let's have a look at that at the daily chart level. So A, an incomplete zigzag. That means minor A here has to subdivide as a 5-wave structure, does it? Could it be a leading diagonal? There's a lot of overlapping in here. This is the key. If this doesn't work, the whole thing won't work. Okay, that does work. So I'm just checking wavelengths. 5 at 58693 is shorter than 3 at 104996, which is shorter than 1 just. And 44739 is shorter than 2. Okay, do the trend lines converge? But they don't look very good at all, do they? I can't see this fourth wave as a triangle, because within a diagonal, all of the subwaves of a leading diagonal usually subdivide as zigzags. 1, 3 and 5 can also be impulses, but they're usually zigzags. But 2 and 4 must be zigzags. 2 has to go here though. Now the wavelengths don't work. I don't want to put the end of 2 here, because then it'd have a truncated C. Oh, actually not necessarily, because it could be B is an expanded flat in here. And now minuet C does move beyond the end of A. There's no truncation. 3 looks like a zigzag, 1 looks like a zigzag, 5 looks like a zigzag, but the trend lines aren't adhered to. That doesn't look right. Okay, this meets all Elliott wave rules, but it doesn't have the right look. So the probability is reduced. I don't like the look of that at all. This really does look like a triangle. A, B, C, D, E. I think there's a triangle in this position here. Oh, what else could this be? Oh yeah, okay. Okay, I've got a solution here. This could be a zigzag, okay, and then B, minor B, starting here, could be an expanded flat. And now minute C, that looks pretty good as an impulse, doesn't it? I like that, that fits better. Okay, that's better. So, minor wave C. I don't like trying to calculate targets for cryptocurrencies. They don't commonly exhibit good Fibonacci ratios, and that's what I'm using to calculate targets. So I'll have a go, but it comes with the caveat, excuse me. Ah, yeah, true. Oops, I've missed that, haven't I? Okay. I have to relabel this as a double zigzag. And motive wave won't let me do that. So wave A within a flat correction can be a multiple. It can be a double zigzag. That's what I want to label this as. Motive wave doesn't want to let me do that. So W is a zigzag, X an expanded flat, and Y an incomplete zigzag. Might be a bit premature to label A and B over, but I want to put that there. And then that means C has to be a 5-wave structure, which means it'll be in a third wave down. That's quite bearish, actually. Where is my third wave label? Bring that back up, thanks. Oh, well, this is possible. It actually has a better look than the other wave count, but I don't really like either, to be honest. I'm not going to worry about the structure of B. I think this could be the middle of a third wave here. That looks pretty good. Okay, let's try and give you some kind of target. Let's use the ratio between minute A and C here for a target. Okay, I just prepared my chart. Here's my target for minute C to reach 1.618, the length of A, 0.4165. That'll bring Y down. And then you'd have a bounce for B. Not that high, probably. If A subdivides as a 3, then that means B can make a new price extreme beyond the start of A. So this invalidation point only applies while A is unfolding. I think this might be my main wave count, overall sideways movement in an ever increasing range for a little while yet, well, months. And then when that's complete, the bull run to resume, or the next bull run to begin. I think this looks pretty good. A little bit of detail in 3 here. Let's have a look and see where this may be. Does this subdivide as an impulse? Here. I want to put this here. I want to put this here. And I think 2 could be an expanded flat. That looks pretty good. 3 could be over here. 4 could be a little triangle. Oh no, that actually doesn't look very good. I want to put 3 there. B would have to be there. Possibly premature to consider a triangle here. It could certainly morph into a combination of some description, but for the short term, an invalidation point for this would be here, because subminuet 4 may not move into subminuet 1 price territory. Important to note that the invalidation point for subminuet 4 is here, not here. Subminuet 4 could overlap into subminuet 2 price territory. The rule is really clear. Subminuet 4 may not overlap subminuet 1 price territory. Motive wave doesn't get that right, but that's okay. That looks okay. I think the middle of the third wave may have passed. For most of these cryptocurrencies, though, it's the fifth wave to end a third wave 1 degree higher that tends to have the strongest momentum. So, while price remains below 0.73270, this will remain a valid wave count. It has the better look. I think it looks okay. And it means we would be expecting an increase in downward momentum for the short term. And here's the target for intermediate A to end. When that's done, when intermediate A is over, a big bounce for B and then C to move below the end of A, so that the whole thing for cycle 2 takes up time and moves price sideways. Let's have a quick look at classic analysis charts I prepared earlier. Okay, let's take a look at some classic analysis for XRP. Just the daily chart level. I see a hammer candlestick pattern here. I had expected that could have been a low. We didn't see strength off lows though. Here's the first real session that's showing some upward movement. It's got weaker volume though, and here some upward movement. Starts out really weak. For confidence that a sustainable low is in place for these currencies, you really want to see some good strength off lows. We didn't see it here, so it's unsurprising that we've got more downward movement. Have we seen it now? Here's another hammer candlestick pattern with volume pushing price lower, so this is bearish in terms of volume, but bullish in terms of the candlestick pattern being a bullish reversal pattern. It's just being followed by some sideways movement though. Here's an upward session. It has a little bit of strength from volume, but not as strong as these previous downward sessions. And this first upward session here, or inside, but with upward movement, it's closed green with a bullish long lower wick, doesn't have support from volume. This looks like a pennant pattern. This looks like a continuation pattern. And so we can use the flagpole from this high to this low of the pennant, calculate that distance from a potential breakout point, and have a possible target for more downward movement. I'd expect this one to move lower. On balance volume has a weak range. Actually, let's just real quick do that. Okay, if we take this flagpole here, add it to around about where the breakout point may be, say it's going to be about 0.6, that would give us a target in classic analysis terms about 0.35262, which is below the Elliott wave target. That's okay. So there's two targets to work with, 0.35262 using this pennant pattern, or the Elliott wave target for Ethereum, which I calculated at XRP, 0.4165. Okay, no signal from on-balance volume, ADX indicating a downward trend, which is now very extreme. It's above 45 and above both DX lines, but certainly can get more extreme than that. Here is no bullish divergence between price and RSI. The low for RSI here, price moving sideways and higher, RSI back in neutral territory, room again for price to continue lower with this downward trend. Stochastics neutral, ATR declining as price moves sideways in the pennant pattern. There's a death cross here, should have noted that on the chart. The short-term averages are below the mid, which is below the long. These guys are negatively sloped. The long is essentially flat and price is below all three. Well, it's at the short term. It's below the mid and the long. So overall this is bearish, pretty close to fully bearish. This chart looks pretty bearish. I don't see strength off lows. I'd expect this one to keep falling. So the Elliott wave count for XRP pretty much agrees with that classic analysis conclusion. Let's move over and do Ethereum now. And I'm sorry, I'm still recovering from COVID here and got a bit of a headache today. Possibly might be misnaming XRP and Ethereum and getting the names of them mixed up. That's okay, I'm not getting the charts mixed up. It was mostly, oh, it didn't work out, did it? This doesn't look right either. So this has got the same problem. Okay, is this high 4022, is that? No. Okay, I think I'm going to get rid of this. I don't like that. How far has this moved above? Quite a way. I'm just looking at how far cycle 3 has moved above cycle 1. Could primary 3 be over here? I think for Ethereum maybe. What's this low? 2172, and what's this high? 1432. Okay, I think I'm going to relabel this. Oh, that's actually quite bearish though. Have I got an alternate that does that? I don't like that alternate. Okay, where's the low? Is it here? 1707. Yeah, it's here. So here we could have an impulse up. I think this looks better. Yeah, I'm going to do this. 4 and 2 though. 4 is only 6 weeks, 2 is 37. That's not ideal, but it's acceptable for these markets, and this is why. I've learned over the years that these markets are very similar in behaviour to commodities, which I've been analysing in terms of gold and US oil for over 10 years on a weekly or daily basis, and I've learned that commodities have a tendency to swift, strong fifth waves. When they do that, the fourth wave that comes before them tends to be more brief and shallow. This one isn't particularly swift and strong. It's shorter than the third wave, which is a lot longer than the first. But I've learned that fourth waves for commodities have quite a strong tendency to be a lot more brief in duration than their counterparts, second waves, giving for commodities their impulses a curved look. Because the second wave is so long, the fourth wave can be so brief and shallow. So that's okay, and this certainly looks like a third wave. The question is the fourth wave over here, or is it continuing? And I've got wave counts for both of those. This has a nice curved look to it, this third wave, that's what I'm talking about. This looks like a pretty good zigzag actually. So the invalidation point sadly would be all the way back down here, and I'd expect if this is the correct wave count for primary 2 to move lower. Let's get an arrow in here, to reach 80 to 90% the length of primary 1. I'm going to calculate a range of that for you. That's based on the price history of these markets. Okay, so here's a common range. If that idea is correct and Ethereum's still in a bear market, then the most common range for primary 2 to reach would be 0.8 to 0.9 times the length of primary wave 1, so 1036 to 563, somewhere in that rather large range. And when you have A and B within primary 2 complete, you could use the Fibonacci ratio between those two to try and calculate a better target. I don't think you can do that yet. I just do not want to spend too much more time on this one in terms of Elliott wave. Let's go have a look at classic analysis for it and see if there is strength off lows. So let's look at Ethereum. So here's a downward trend. ADX says yes, there's a downward trend. At the moment it's declining as price is moving a little higher. The downward trend just reached above 45 and above both DX lines, so it's very extreme here, but not as extreme as it can get for these markets. At the last little low, there is very short-term single bullish divergence between price and RSI after RSI reached oversold. In conditions where the trend is extreme and RSI reaches oversold, it's unsurprising now that we're getting upward movement. Is this a counter-trend movement within an ongoing bear market, or is this the start of a new bull run? That's a really hard question to answer, and in order to try and answer that, we want to see what I call strength off lows. I want to see a bullish candlestick reversal pattern. Yes, we've got it in this hammer candlestick pattern. I want to see a switch of the short-term volume profile from bearish to bullish. We've seen that, but this is the strongest session here, but I want to see strength off lows. Would have preferred to see a stronger bullish candlestick, or at least not an inside day, an upward day with stronger volume than the previous downward session. So a switch from volume pushing lower to volume pushing higher. We don't see that. I can't see strength off lows here. As price is moving higher, ATR is also declining. There's some weakness in this upward movement. Volume is also declining as price moves higher. This doesn't look particularly strong. With the data in hand at this point in time, this looks more likely to be a counter-trend movement than the start of a new bull run. That could change though. Let's go back to the Elliott wave count. What do we need to see for this to change? Well, sadly, I'm going to have to do a short-term Elliott wave count for you. Let's get rid of this. And let's create a new one. Base it off the weekly. And I want to see where could our invalidation point be? At what price point is the Elliott wave count going to be proven wrong? And so something else is happening. So if this is primary 2, it's most likely a zigzag. Intermediate A would most likely be incomplete. This looks like a third wave. Nope, I want to put this here and this here. Is this third wave from minor 3 complete? Nope, I want to put this here and this here. And then a short little fourth wave in there. Is this going to subdivide? Yes. Okay, this is going to subdivide. The middle of the third wave works, so this is possible. So that means the fourth wave should not move into first wave price territory, and for this bearish movement, you can't put the first wave anywhere else. That is higher. So this would be your conservative price point, 3959.228. So here I'm going to use Elliott wave, the Elliott wave count for Ethereum to inform the technical analysis. The technical analysis is bearish. The Elliott wave count is bearish. At what point would the Elliott wave count be wrong? And then we would have confidence in a new bullish run. That's your price point, 0.3959228. Because 4 can't move into 1. 4, to be honest, looks like a pretty good complete zigzag. Complete or nearly complete, I'd expect resistance at this trend line. That looks like a pretty good resistance line. A couple of tests here, nearly here, nearly here. Yep. If this line is breached by a full daily candlestick above and not touching it, my classic technical analysis would be in doubt. If we start to see upward movement with a good strong push from volume, my classic analysis would then be in doubt. If we see a new high above 3959.228, it would then be likely that Ethereum could very well be in a new bullish run. Until that's happened, while price remains below this, look out for resistance here. Look for, if it does get up to this line, look for a reaction, resistance, and a fifth wave down to complete an impulse for primary A. Intermediate A. If we see an impulse complete lower, the correction's not over, because a correction can't subdivide as a 5-wave motive structure. And so if you see a 5-wave structure when you're expecting a correction, then the correction's incomplete. After A, there'd be B and then C to move lower. Okay, that's it for me for XRP and Ethereum. Sorry, this is 10,000 years long. If you've managed to watch all the way to the end, thank you so much for your support. I'm recording from Iriarte this week high up in the Andes in Colombia. Should be back to Bogota in another week or so.